So today we're going to talk about funding long-term care. There are several options to look at, and today we will look at private, public, and federal grants. So the first thing we're going to talk about is private financing, where there are three options to finance for long-term care. The first is reverse mortgages. These have been around for quite some time, but they're not for everyone. It's a type of home loan that allows you to receive cash against the value of your house without selling it. So you get to live in your home, but you're basically paid for living in your home. Annuities are another option. They are contracts with insurance companies that traditionally provide a guaranteed distribution of income over time. And you can choose to have that paid until someone passes away or until a final date. Trusts are another option for private financing, and they're an easy way to control and transfer money. You can either use a charitable remainder trust or a Medicaid disability trust. So, for example, if you have a mentally challenged child or a physically challenged child, you can use this money towards their care. The second option we're going to look at is public financing, which include Medicare and Medicaid. Medicare is the federal program that does not cover the largest part of long-term care services or personal care, like help with bathing. And this is a cost that people need to be careful to pay attention to, because they will need extra savings or somehow privately pay for the extra care that someone might need. Eligibility requirements also include being 65 years and older, or under 65 with certain disabilities, and people of all ages with end-stage renal disease. Medicaid is the state-run program that works jointly with the federal program, and this is for people who have low income and assets to pay for some or all of their healthcare bills. Luckily, it does cover medical care like doctor visits, hospital stays, and long-term services in nursing homes and at a person's home. Eligibility, however, varies from state to state, so just because your cousin or your sister or brother has coverage in their state doesn't necessarily mean that you are going to have coverage in your state. Another type of financing that typically faith-based organizations use are grants. There are two types of grants that the federal government uses, and the first is discretionary grants, which are dispersed directly through a federal agency. And the second are formula or block grants, which are dispersed through states, cities, or counties that have received federal funds to distribute as they see fit. The only downside for individuals is that they cannot apply for these grants themselves. It's only through the organization that they could receive help with their financial costs that they are facing. So, and that particular organization may not have the kind of care that they need, and so the financing that they could offer really wouldn't be helpful to that individual. Grant money is also not guaranteed just because an organization applied. Thousands of people or organizations could apply for a particular grant and take years before they finally receive that federal funding. And funds are also not set aside specifically for faith-based organizations.